And now let's talk about markets, right? Bitcoin is deviating back above the 12-hour 200s. So initially we were deviating inside of this range. And then I gave this update whilst I was on that vacation. And I talked about how that's not good. That's not what we want to see. There's nobody on earth that says, oh, I love when we trade back inside of an 8-month range instead of expanding away from it, right? This is so healthy. No, that's cope. That's not the actual analysis, right? We would never make that analysis. If it ends up being a who fucking cares, we're going to rip higher anyways, great. We have to reclaim those 12-hour 200s before that happens. So I'm not going to make that speculative argument. Of course, when I see the breakdown that looks like, smells like, and trades like a breakdown, and the deviation back inside of an 8-month range that clearly looks like and smells like and trades like a deviation, I'm going to call it a deviation. And then when we reclaim it, I'm going to say, oh, that was a fluke, that was a fake out, that was a bear trap, that was a break of the lows, sweep of the lows, whatever you want to call it. It all means the same shit. We did something that was presumably incredibly bearish just to not really care about it and potentially rip higher anyways. Cool, right? That's the analysis. So that's the analysis that I'm making. That is how I'm adapting back to the market after being wrong, right? I was wrong that we would hold this region. I was wrong that we would continue lower after breaking that region. And so now I'm just continuously adapting. I'm just going to make the next kind of branch off of that analysis the same way that I always will. So that's the analysis, right? The way that we contextualize this is by scaling assumptions to lower time frames. So this is still high time frame. And please keep in mind, we are talking about, is Merc talking or my mic is down? I am talking. I'm talking. Can you guys hear me? Everybody can hear me well? Yeah? Okay, cool. So it's just Taman right now. All right. So, no, you're good, dude. Don't even worry about it. I'd much rather you guys cut me off in the middle of a sentence than me ramble for 8 minutes and then someone's like, oh, by the way, we can't hear you. That has happened before. So we are trading above an 8-month range. We are trading above the highest time frame trend of which we actually care about. And really, I guess that's not so fair to say because we do kind of care about these 2-day 200 moving averages, right? But they're just not very actionable. So we've maybe only been allowed to care about them 1, 2, 3, 4 times in the past 2.5 years. Okay, cool. So they don't really matter all that much, right? 99% of the time. So right now, we care about those 12-hour 200s. I'm still going to care about this. This is still the thing that allowed me to capture this rally in the first place, and not just capture it, but also capture it to the right degree. Meaning, when we saw this reclaim, we said, hey guys, this isn't just your measly pity relief bounce. This is rally number 7 that actually fucking matters in the past 3 years. Don't fade it. And then for the next 4 months, we rallied higher into new all-time highs, right? I still care about that trend. I'm not just going to throw it into the garbage bin because it got kind of chopped up for all of 2 weeks, right? That's not how I work. So I still attribute a lot of relevancy to that. Obviously, as long as we're still trading above an 8-month range, that's a good thing. That doesn't really mean, that there's no warning signal there. There's no cautionary tale to tell. I'm just going to say we are trading above an 8-month range. So the chances are that maybe we just expand away from that 8-month range into further price discovery, right? And I think that that's a fair argument because that's the same argument that we made over here. In this 8-month range, that's the same argument that we made over here. In this 2-month range, that's the same argument we made over here. In this 7-month range, and that's the same argument we made over here for this 5-month range. And it worked, right? So I'm going to continue making that argument. I don't care if it doesn't work. So, by the way, somebody tried to point out, not tried to, it was a good kind of bit of nuance and discussion. Hey, well, we don't want to fight multi-month long range breakouts, but didn't you say the same thing when we broke down below the 5-month range in the depths of the bear market? Yeah, I did. I absolutely did. And then I was wrong. So then I adapted, and then we called a breakout a breakout. We called the new uptrend an uptrend. We called the higher highs and higher lows, higher highs and higher lows, right? And then from there, we said, in hindsight, that was a deviation. What do deviations imply? We did something outside of the norm only to resume the norm anyways. We're probably going back to this range high at minimum. So we adapt. So when we're wrong on that assumption, on that grand assumption, we adapt. When we're right, we capture multi-month long 70 or 100 or 300% rallies. What is the issue exactly? What's the, oh no, what if I'm wrong? What if we don't break out into new all-time highs? Where does that come from? Lack of confidence, lack of belief in your own abilities, right? That's truly where that comes from. So I'm not going to play into that. It's never been in my favor to do so ever in my entire trading career. I'm not going to start now. As long as we're still trading above this 8-month range, as far as I'm concerned, it's all systems go. We threaten uptrend continuation into price discovery, which is exactly why you are here. Don't allow something stupid like CPI to shake you out of that any more than, oh yeah, I was bullish and I thought that we would rip into a bull market and into price discovery. And this is exactly why I'm here, and I'm probably going to underperform unless I capture those rallies. But the presidential election's coming up, and I knew that for the past 2 months, but the presidential election week, yeah, it's here. What? Cope. It's absolute cope, right? We don't care about those arguments. I'm not going to come in and make these outlandish arguments that are, 17 standard deviations away from my system. I'm going to continue respecting the same system that rewarded me in the first place for both directions. And that's that contextual kind of discretion coming into play with my system, right? We're trading above an 8-month range, and we've just recently reclaimed the same 12-hour 200 MAs trend that has allowed us to navigate substantial rallies and substantial sell-offs, the only substantial rallies and substantial sell-offs that have mattered the past 3 years. I'm not going to stop respecting it today. So the way we contextualize this argument or this analysis is by zooming into lower but still high time frame trends, right? So we can make the argument that yes, we are back above our 12-hour 200s, and as long as we trade above that region, that inflection point, and above an 8-month range, there's really not too much of a reason for panic, right? Or bear market, or doom posting, or anything along those lines. But we can't necessarily anticipate immediate trend continuation, because the same argument that got us into that region in the first place is still lingering above our heads. And what I mean by that is we lost a high time frame trend, right? You can't create a snowman without building a snowball first. So how did we get to the point where we could have this bullshit fluke, bear trap, deviation, sweep of the lows, whatever, right? Below our 12-hour 200s, we lost the 6-hour 200s first. And when we lost those 6-hour 200s, we called it for what it was. We said, hey, this isn't good. We don't want to see this. It's not necessarily the end of the world, right? It doesn't necessarily mean bear market, because guess what? We did the same thing here, and that wasn't the argument that we made that time either. We didn't just immediately go, up, we're below the stupid green and blue line on the 6-hour. I guess we're entering a bear market now. We didn't do that. We said, hey, we might test the 12-hour 200s just to keep it pushing upwards anyways, right? That was the argument that we made. We contextualized it. And the way that we caught or avoided the sell-off into the 12-hour 200s is by acknowledging the objective weakness at hand. We saw a breakdown. We saw a trend get lost. We saw lower lows come into the market. We called it for what it was. And then all of a sudden, when we're getting our retest of that region, we're not shocked by it. We're not surprised that our limit bids are getting filled. We're not, surprised that the trend starts to break down. We knew that all trends break down. We are able to contextualize the analysis, and that way we're not just, straight up bullish for all of this downtrend, and then at some point somewhere around here we go, oh, by the way, guys, we might be fucked. It's like, well, thanks, Sherlock, right? Oh, it just came out of nowhere. Yesterday I was still calling for price discovery. Today I think we're entering a bear market. That's never happened. That's not how I trade markets. That's never been how I think about markets. That's never been how you've seen me talk about markets. That's not how I trade either, right? We have to see it coming. So if we're going to be objective, and that objectivity allowed us to anticipate the deeper pullback into this inflection point so that we could chop it to bits in hindsight anyways, right? If we are able to do that in the first place, and it's still the same argument lingering over my head, why am I going to neglect it today? It's not fair, right? It would be delusional. It would be, very one-sided. It would be very biased. It would be not objective. It would be speculative. So really, the fun starts when we can no longer make the argument that this is still some kind of weird chop, overthrow above the 12-hour 200s before the lower high gets put in on a daily's market structure, right? Because this is still lower highs and lower lows, right? That's a lower low, and so far we're threatening a lower high. If we were ever going to find a lower high, where's the best place to do it at? Maybe the same place that has acted as higher lows, right? On the daily, the 6-hour 200s, right? Maybe the same place that allowed for that deeper pullback into a higher time frame inflection point in the first place. If we were ever going to find a lower high on the daily, this is the place to do it at. Which means, therefore, right? Let's flip that analysis on its head. The same way that we engineered it, we can reverse engineer it. If we are unable to find a lower high on the daily at this region, what does that probably mean? Where else are we going to find a lower high on the daily? Here? What resistance is here? It doesn't exist, right? It's just a bunch of thin air. We have every reason to resume the uptrend into price discovery once again, because the inflection point has been reclaimed. And inflection points, if you were to define that kind of statement, the inflection point means whatever happens in this region allows us to scale what we think will happen to an even greater degree. So if we manage to find a lower high, lose the 12-hour 200s again, put in yet another lower low, at that point, the initial analysis that we made is relevant again, right? We are deviating back inside of an 8-month range. Oh shit, nobody that actually has a brain is going to tell you that they love to see this, right? Oh, I love when the market goes lower instead of higher. No, you don't. You want it to go higher. That's why you're here, right? Sorry. When that happens, right, we can say, in hindsight, good thing that we were objective. We saw it coming, right? We didn't just immediately, jump back to bullishness and neglect every argument in the book, right? Just because we wanted to go to new all-time highs again. And if we manage to reclaim this region and fulfill the rally thereafter, who's going to see it coming? We will. Because we saw there are no bearish arguments left. After we reclaim these 6-hour 200s, there's not really too much above our heads stopping us from getting to new all-time highs again. If there's not really anything stopping us from making new all-time highs again, then at that point, we are the most bullish that you could possibly be in markets. Period. Price discovery, uncharted waters. I don't know how high Bitcoin goes. You don't either. Stop trying to call top at 90K. We end up going to 125. You look like a complete fool. Right? And when you take this exact same analysis and you extrapolate it to any altcoin, stop trying to call top at 10 cents. We went to $5. Right? And this is exactly why you're here. So that's the analysis. That's how I'm going to talk about the market. That is the daily market update that I will give after the stream, which is very backwards for me, but that's my analysis. So that's how I'm looking at the market. I am still largely bullish overall because I'm prioritizing trends. This is not a hedged analysis. I'm going to prioritize the 12-hour 200s over the 6-hour 200s. And I'm going to prioritize the fact that we're trading above an 8-month range. I'm not going to hope and pray that this is a deviation back inside of the 8-month range. That's not what works for me, even the times where that's actually what ends up happening, right? So long-term philosophy is still long-term philosophy regardless of short-term variance. I'm going to respect higher time frames until the market gives me a reason as to why I should stop doing so. And when the market starts to shift on that even higher time frame scale, I will have seen it coming and I will have the wherewithal to scale it to that kind of degree as well. The same way that we said, hey guys, this might be rally number 7 that actually matters in the past 3 years. And then 5 months later, we're talking about how it was rally number 7 that actually mattered the past 3 years. When we lose that exact same trending argument and we create very parallel, very similar kinds of arguments to the downside, I'm going to scale it to that kind of degree as well, all the same. And then I'm not going to apologize if it ends up chopping up or doing whatever, being a fluke, fake out, whatever, right? This is how we avoided this sell-off and still managed to catch this rally anyways. I'm not a bull posting idiot that just talks about sweep of the lows, buy the dip every day, all day, 365 days a year. That's not how this works. We do both ways. We play offense and defense. We don't need the market to do whatever we want it to do in that time based off of what it's implying it will do. So that's that winning philosophy. I know you guys missed it, the whole rambling and whatever, and long-term spiels and psychology and all that. But yeah, that is my rant about Bitcoin. We can go ahead and move on to Ethereum. Now, Ethereum is incredibly interesting to me because it's doing something that it hasn't really been able to do in 3 years, and that is show and sustain relative strength compared to Bitcoin. Now, the argument would be, in terms of a losing philosophy, oh, this has never happened before, but every time this kind of happens, it's always a top indicator. It's always the market is overheated, we're ready to enter a bear market, we're ready for a major sell-off, right? Yeah, but it's never happened before. And in the past 3 years, we've watched Ethereum underperform. We've watched people say, it's lagging, time to rotate to Ethereum. And for 3 years in a row, they were wrong. And Ethereum underperformed Bitcoin throughout those 3 years by negative 75%. Think about that. If you were holding Ethereum instead of Bitcoin for 3 years straight, and you wanted to sell your Ethereum for Bitcoin, you could afford a fourth of what you could have 3 years ago. It's pathetic, right? It's absolutely abysmal. So for the first time in 3 years, we're watching Bitcoin. Oh, it gets chopped up. Oh, it kind of traded below an 8-month range. Oh, it broke the daily market structure. Oh, it's trading below high time frame trends, right? We're watching Bitcoin create that analysis. Oh, well, we can't get too eager, guys. It's still a bearish retest on this time frame. Might be a lower high in the daily, right? And then we look at Ethereum, and Ethereum is maintaining higher highs and higher lows, and it has not even managed to break down below 4-hour 200 moving averages yet. Oh, and by the way, when we contextualize that analysis, we're watching it trade above a 4-year range, something it has not been able to do in 4 years. But it's doing it today. And then this is where somebody goes, oh, but we deviated the last time. How in the hell are you going to be able to capture the rally whenever it happens? Right? Let's say it does deviate this time, and then it deviates the next time, and it deviates the next time. And then sometime in 2029, we're starting to break out. You caught deviation. Aren't you going to call this a deviation too? But that's the rally that you're here for. That's the 2080. That is the, hey, if you catch these, but you're losing 1R, lose 1R, lose 1R here, this drastically overcompensates. All of a sudden, you are up 90R. You are largely profitable over the course of 5 years because you're wrong once, and even though you have a 25% hit rate, you are up 90R. 2080. How in the hell are you going to catch the inevitable rally, right? Whether it's for this asset or the next one, right? Think of any stock in the market that is in the S&P 500 at this moment. They're all fucking ripping into new all-time highs, right? After that March 2020 drop. So, yeah, how are you going to catch those rallies and ride them out? And, oh, by the way, if you're not doing that, you are largely underperforming, right? I'm looking at you, Vanguard, Fidelity, Charles Schwab, right? All those people that are like, hey, we'll get you 10% year over year. Meanwhile, the stock market is up 50% the past 365 days. Yeah. You're going to underperform because you're not making the most out of those periods in the market. But the times where the market does do some bullshit, right? The 80% of the time that it is bullshit, because it is, 80% of the time it's chopping, right? It's trading sideways, or it's downtrending, or it's giving you a, hey, that's a fluke. Just kidding, right? The other 80% of the time, oh, you're on top of it though. Yeah, it doesn't matter, right? Because those gains are very few and far between. Because those gains are also mitigated with more chop and with more false signals and with more bullshit, right? The other 20% of the time, where the market actually manages to do exactly why you are trading crypto and not Forex, yeah, that is going to be the thing that you tell your grandkids about 40 years from now. You are not going to catch that rally, at least not to the degree of which you fantasized about catching it when you joined this industry in the first place. You're not going to make the most out of it. You're not going to feel fulfilled or satisfied. In all reality, you're probably not going to feel that way anyways, because we're humans, we're greedy as fuck. But you're going to have even more reason to feel that way, because you're not going to capture that movement, because you are always thinking about the what if. What if it's a deviation? Well, guess what? I'm here to tell you I made the same argument this time. Don't let me fool you. This is not a, hey, let's go listen to Mercury talk about how he's always right 3 hours straight, right? No, 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 no. I was calling for, guys, the multi-month range breakout. I don't know. Looks like an uptrend to me. Higher highs, higher lows, above key trends. It's the same analysis that worked. We're probably going to rip into price discovery. And then we didn't. And it was a market top. And it was the market top. Unbeknownst to me, I had no fucking clue that that would be the market top for the next 4 years, by the way. Right? I had no idea that that would be the case. So what did I do? Well, eventually we lost that region as support. That trend that looked like this, yeah, it broke down. And when I zoom in to this daily market structure, I see lower low, lower high, lower low, lower high, lower low. I don't know. That's all three parts of my system, isn't it? So at that point, it's a downtrend. And then we call it a downtrend. And then I get to avoid a negative 80% sell off the next year because it continues to downtrend. So when I'm wrong, we figure it the fuck out anyways. When I'm right, I get to ride exponential fucking rallies, which is the same reason why I joined this industry in the first place. And I get to extrapolate some reward to a very, very similar degree of what I thought I would in my dreams when I entered this industry in the first place. What's the issue exactly? It's that phenomenon, man. And it's not a phenomenon. It's math. It is literal math. You can flip a coin 1,000 times. Actually, I tested this. I went and asked ChatGPT, and I said, hey, flip a coin, generate 1,000 coin flips, and tell me exactly how many times that you saw a streak of heads or tails 5 times in a row. And it was highly varianced, right? Because on average, you should get 7. I got 15, right? ChatGPT, it flipped randomly 1,000 times, and 15 times in that example, it had either heads or tails 5 times in a row. Yet somehow it was 49% to 51%. It was still relatively 50-50 anyways. I think I screenshotted it. I hope I did. I can send it in Livestream chat. If you don't believe me, go to ChatGPT and ask it to run the exact same experiment. It's a phenomenon. And except it's not. It's just math. It's just long-term profitability, but translated into a word format, and we apply it to market philosophy. And it makes sense. And the longer that you subscribe to this idea, the longer that it gets vindicated in your head, the easier it becomes to rely on your abilities, because you understand that you always have the ability to figure it the fuck out anyways, because you're always subscribing to the right philosophy. And the math just maths. Right? The universe just rewards winners from there. Long term. This is not a, hey, Ethereum is going to rip higher, even though that is my analysis. I'm not going to hedge myself. Please do not fucking think that I'm playing both sides at the same time. I'm a directionally biased trader, right? It's the only way I make money. This ain't a hedge. I think Ethereum fucking rips from here. Don't get it twisted. This is not an Ethereum discussion right now. This is a here's how you win for the rest of your days discussion right now. Long-term profitability. And it is applicable here today just as much as it has been applicable on the way up into today. This is not the first time you've heard me say this argument. It is where we've been able to scale it to an even greater degree. And to that, I just simply say, winners average winners. And that will always be the case. Somebody actually was, I don't know, they're just losing their minds. They're going absolutely insane in the free Discord. And they said, Mercury, we're coming for your stop losses. We're going to liquidate you, Mercury. We're coming. I said, okay, good luck. I bought 5 months ago. What? How are you going to liquidate me? First of all, I'm trading spot, so you can't liquidate me. But second of all, I bought 5 months ago. These arguments didn't become applicable yesterday. They've been applicable. We're just scaling. We've had the right mindset this entire way through. And I hope to God that you've seen that firsthand and you believe it and you've been able to express it in your own trading as well. That's the only way you're going to get vindicated. It's the only way you take a bite of that pill and actually swallow it and believe in it for the rest of your days, is experiencing it firsthand. It is not good enough to watch me ramble about markets and be right sometimes to an incredible degree and wrong a lot of other times. It's not enough. You have to experience it firsthand. So I hope that that's been the case, because this ain't new. This is not new information. It's regurgitated. It's scaled to a greater degree, and here's why. We haven't done this in 3 years, and now we are. Oh, but it's going to be a deviation, a fluke, a fake out, a bull trap, a this or that. Okay, cool. Did you not tell me the same thing here? Yeah, but Mercury, you see, I called deviation here, and, I was right. You were wrong. We didn't see a massive yearly, proportional, directionally proportional kind of breakdown to the 2-year rally. No, we didn't see that. Oh, yeah, you're right. We didn't see that. And you know why? Because we reclaimed 4-hour 200 moving averages. And then after we reclaimed that trend and broke out of this month range, right? You see this the purple box is already pre-marked, right? I didn't do that deliberately. That's just there from years ago. Yeah. So when we broke out of that massive range and reclaimed that trend, we continued trending higher into the next key level, right? Next key level, maybe somewhere around here. We got into that region. Oh, and then we reclaimed that level too. And at the time, we were using 200 daily moving averages. So when we broke out, pulled back, retested 200 dailies, we said, hey guys, looks like a breakout pullback retest. The higher highs and higher lows, yeah. They look like higher highs and higher lows. I don't know. Maybe the market goes higher. In hindsight, I'm wrong. Here's how I portray that. I draw a stupid fucking purple box. And then I say, well, I guess I was wrong. Bearish at the bottom yet again. Stupid me. We probably go higher though. And then we did. And then we chopped up, chop. And then we broke down below a multi-year range and a multi-year uptrend. And then who is the person that goes, deviation, buy the dip, buy the dip, buy the dip, buy the dip for the next 3 years? Yeah, not me. Because that's the same argument I made this time. When I was wrong, I figured it the fuck out. This is not bullshit hindsight. I have all the receipts for you, right? Whether it's in the form of a YouTube educational video or a live stream that was done or a daily market update from that same exact channel that you can go back to right now and go read exactly what we said and how we said it. Oh, and then when it happened the next time, I made the same argument that didn't work. Except this time, I looked like a genius for the rest of the majority of the next 3 years. And then my geniusness is hindered because you get to simplify it in the sense of, All he did was look at the 2-day, the stupid green and blue line, and say, the number go down. And then I was right for 3 years because of a stupid green and blue line. It's not a stupid green and blue line. It's the mindset. It's the psychology. It's the discipline to actually adhere to it and not bite that forbidden fruit of greed to say, oh, it's a laggard. It's lagging. It's lagging. Surely we can't keep going down. We've been going down for the past year and a half. We're going to bounce eventually. It's just a matter of time. Yeah. You had to wait another year and a half. It was inevitable. I will give you that. But you had to wait another year and a half and another negative 50% after the negative 50%. There is winning philosophy in markets and there is losing philosophy. Never let anybody convince you otherwise because of variance. Variance. We subscribe to winning philosophy and we overcome variance. And because we do those two things, we win. Don't let anybody convince you that markets are more complicated than that. Okay? At a core, foundational kind of concept, that's what it is. That's what winning in trading means. It's those two things. Regardless of how you trade, what your system is, what moving averages you use, right? Whatever, right? Regardless of all that shit, when you boil it down, it's those two things. You overcome your variance, and you subscribe to your philosophies. And because of that, you win. It's applicable today, too. I'm not going to just randomly decide to not apply it. I didn't know this would be a deviation any more than I knew this would be a 3-year trend breakdown. I didn't know these things. I never have, I never will. And even though that's always been the case, that's always been okay. I've never needed to know. That's the point. Just educated guesses, right? At the end of the day, contextualized to a directionally proportional kind of degree. When I see a 3-year signal for the first time in 3 years, you're not going to find me making counter arguments as to why it's not going to do what it implied. Otherwise, if I were willing to do that here, don't you think I would have been calling buy the dip? Rotate to Ethereum? They can't keep underperforming this long. Buy the dip. Buy the dip. It's not a dip. It's a downtrend. It's very simple. Right? Winning philosophy wins. If there's anything you take away from these streams, let it be that. So, that's my rambling. Quickly, we can take a look at SPY. I actually haven't looked at this. Oh, new all-time high. So uptrend that has been an uptrend continues to uptrend. Is anybody surprised? Are any of you shocked? Don't let me be condescending, right? Because at the same time, if the downtrend that became a downtrend started to downtrend and continued to downtrend, I would have told you, hey, the uptrend that was an uptrend that we knew it's a trend and not a permanent, and it eventually broke, and then it did, and then it continued downtrending. Yeah, it broke. Is anyone shocked? Don't let me fool you. I am a hedged piece of shit. I will always tell you, haha, I told you so, I'm right. But it's very simple, right? We expect the trend to continue trending the same way that we have from the very beginning. So we're not flipping bullish, right? At the highs. It's not flipping bullish. It's adhering to the same bullish principles and philosophies that we adhered to 5 months ago. It just so happens that they continue to work and be applicable here today, right? Eventually, those concepts are going to break. On one hand, had the trend continued higher, you are not allowed to say, I didn't see that coming. On the other hand, you know that it's called a trend, not a permanent. So when that trend breaks, you had to have seen it coming. You knew that it was coming eventually. You didn't know when. You didn't know it was going to be this time as opposed to the other time, but you knew that it was coming eventually. Markets don't have the ability to catch you off guard. It is impossible. But especially not when we're not even able to break down below a local trend per trail. Hourly 200s. This chart, by the way, trend trading 101. Absolutely fucking beautiful. If I were to, hey, Mercury, I'm a beginner. I want to get a feel for what is trend trading. I would hand you the SPY chart because it's fucking phenomenal on all time frames, right? The breakdown below 200 dailies allows for a deeper pullback into a 14-year-long trend portrayal, right? The reclaim of 200 dailies that allowed for a 2-year uptrend so far continues to see a 5-month uptrend into resumed price discovery. Man, it's just fucking beautiful. So we love when these principles and philosophies get rewarded. In this case, they're getting rewarded to a very uncanny degree in the stock market. Man, I wish it were the same on Bitcoin, huh? Right? Don't we all wish that? I wish it were the same on Bitcoin. It's the same philosophies through and through. It's the same market. It's the same principles. It's the same shit, right? It's just we're getting different outcomes. Bitcoin is sitting here bearish retesting high time frame trend, threatening a lower high on the daily. And here's the stock market continuously ripping into price discovery. It's not even able to lose a local trend. Guys, it can't even put in a lower low on the hourly time frame. We have not done that in 5 months. Think about that. Oh, and by the way, this is why we trade Bitcoin when we look at the Bitcoin chart. We don't trade Bitcoin based off of what we see when we look at the S&P 500 chart. This is the same reason as to why we trade Ethereum by looking at the Ethereum chart. We don't trade Ethereum by looking at Bitcoin. You're not going to trade Solana by looking at Ethereum. You're not going to trade Pump by what Solana is doing. You trade the asset in front of you. Somebody, I forgot who it was, talked about in general chat how that concept finally clicked for them, and it just felt very good because they were able to apply that concept to things like Bitcoin Cash or Pump, and it just worked beautifully, even though the market was choppy and bullshit, and you see people complaining and capitulating, and you can see the loss of sanity on your timeline. You can really see it. You can feel it, right? You can. Guys, let me put it to you this way, in case nobody has pointed this out to you. There's people calling and creating whole theses, right? 70 tweet threads about why we are doomed in a bear market. And Ethereum and Bitcoin are trading negative 10% off of a new all-time high. Do you realize that? Negative 10% after the highest that they have ever traded ever in existence? Right. I'm supposed to be bear-pilled right now and fearful because of CPI data when Bitcoin has a $100,000 handle. Right. Yeah. Remind me. Yeah, that's why I'm supposed to be a macro doomer right now. It's absolutely ridiculous. So we trade Pump based off what Pump is doing. Kudos to you if you've been trading Pump because of what Pump is doing, because it broke out of a multi-month range and continued ripping higher. As Bitcoin twiddled its thumbs and deviated below 12-hour 200s and is now chopping back above them and is threatening a breakout, but also threatens lower highs. Yeah, by the way, Pump is up 70% in the same time span. Good thing we trade Pump based off of what Pump is doing, not what Ethereum is doing, not what Bitcoin is doing, not what stocks are doing, right? Trade the asset in front of you. That is alpha, as much as I could possibly give you alpha. That's alpha. So apply it and surprise yourself with the results, because it will be surprising. It's going to be shocking. And it's going to feel like, wait a minute, it's really this easy? And then you might get humbled from there, and then the whole, routine starts all over again. We go into that cycle, but eventually the next time you don't allow the market to humble you, and right, the journey takes as long as it takes you, but these principles and philosophies are set in stone, and they precede me. I didn't create this stuff. I didn't come up with it. I just adopted it. Okay? It preceded me, and it will succeed me. I don't know. It will exist after me as well too. So these are winning philosophies. Adhere to them. And be surprised what the reward is as a result. All right. Time to start checking Sol right after BTC and ETH again. I don't think I've ever checked Sol right after BTC and ETH, but it sounds like you're asking for a Sol analysis, so we can definitely go take a look at Sol. So I'm coping hard on Sol. Please remember, I said, hey, this chart isn't really all that clean to me. And then it became clean, and then it broke out, and then it continued uptrending. And yeah, in hindsight, it was an easy trade. It would have been, hey, just simply buy the 4-hour 200s and shut the fuck up, right? And, you know, respect the breakout and the higher highs that look like, smell like, and trade like higher highs. I didn't do that. So I'll always be transparent with you. In terms of analysis, we did say, hey, if you were to put a gun to my head and say Mercury up or down from here on Sol, I'm going to say up, because we are threatening a breakout of an 8-month or 10-month range actually on Solana, and we are above those 200 daily moving averages on Solana, which have helped us represent multi-year long trend portrayals, right? For the most part. A little bit of flukes, a little bit of deviation, but not much, right? For the most part, very, very substantial trends. So if you were to put a gun to my head and say up or down, the trend favors up. The analysis favors up. In terms of how does Mercury take that analysis and, you know, scrunch it up and turn it into an execution of which he presses buttons on, that of which I did not feel so comfortable with. Please let me tell you here today, now that it's uptrending, the same way that I told you this at the time, that is cope. That is me coping. It's my genuine truth, right? It's my honest opinion. I probably fuck up this Solana trade somehow, some way, miraculously, right? Even though in hindsight, it would have been very simple and easy. This is stuff that people don't tell you as traders, right? The analysis can be straightforward, but if you have no conviction in your own thoughts, good luck. Good luck actually trading your own thoughts. As soon as the market does this, now I'm panic closing Solana because, fuck, I knew it was choppy bullshit. I probably shouldn't be trading this, right? Or this, or whatever it ends up being, right? That shakes me out of that trade and ends up putting me in a worse off position. I genuinely believe that long term, I'm doing myself favors by coping the way that I cope. And what I mean by that is by trading the market the way that I feel comfortable trading the market. Never finding reasons to force trades. So I will stick to that, but the analysis held true. We're breaking away from a 10-month range. We are holding the 200 dailies breakout in the form of higher highs and continuation. We're above 4-hour 200s. We just made a higher high on all time frames, right? So yeah, this looks good. Where do we head next? I would imagine 260. When we get to 260, that is the all-time high supply zone, meaning that is the resistance level that stops us before we get to price discovery. That's the last resistance on the entire chart. So when we discussed Solana 2 weeks ago prior to my vacation, we talked about how the incentive to actually go and trade Solana is the idea that it doesn't just get to 260, it breaks out above 260 and goes into price discovery again. And once that happens, you can't get any more bullish on that asset. It's not possible. That's when we threaten these kinds of rallies, right? Are we going to see Solana go from 300 to 3 million? Probably not, right? Seriously, come on. No, we're not going to see that. But that's the kind of rally that we're here for. So maybe we see it go from 300 to 1,000. Don't tell me that can't happen. Do not tell me it's not possible, because you probably would have told me that Dogecoin can't go to $1. And even though it didn't go to $1, it went to 75 cents. It was a 26,000% move, right? But it had spent the past 3 years prior to that trading at 0.002 cents. Not even a full penny. So, again, winning philosophy, long term. That's the incentive to actually go and take that position on Solana, is because it threatens that as a very possible and very probable reality, right? So that's the Solana analysis. If we lose those 4-hour 200s, by the way, I would just simply look for a deeper pullback into those 200 dailies. That's that major inflection point once again, and then we can contextualize the analysis from there. If we hold that region, then we're still technically fine. We could still make the argument that eventual continuation is on its way. And if we lose that region, at that point, there's not really much reason to be talking about Solana, right? And here too. Unless you're shorting, I guess, which I don't do. All right. Sip of water, and then I'll get to Luffy's question. All right, Luffy says, Mr. Stream, sadly at work, but I'll listen later. Risk management question. Let's take an example. Suppose my portfolio is $1,000 and my maximum risk exposure is 10%. So my maximum loss limit is $100. All good traders always say not to exceed your allowable max risk exposure no matter what. But some traders say max risk is dynamic and changes depending on market conditions. Here I'm focused on total market exposure, not just individual trades. I'm glad that you clarified that. Thank you. Do you think beginner traders, or even those with some decent experience, can realistically assess and adjust max risk dynamically on the fly, or are they better off just sticking to a fixed max risk exposure based on their personal circumstances? I had a really good conversation about this with Static Era and just wanted to pick your brain on it. So my stance has always been, you don't understand the difference between a good trade and a great trade until you've started trading. And it's not just until you started trading. There are people out there, and it's very hard. Consider this, right? I don't mean to put people down or anything along these lines, but just think of how silly this is about to sound. You've been trading for 4 years, right? You're not profitable. You actually suck at trading. Your derivatives account is constantly dragging down your portfolio. The only reason as to why you've ever done somewhat well is because you've lost some spot exposure somewhere, somehow, in a cold or a hot wallet somewhere, right? For that reason, because crypto has uptrended over the past 4 years, you've been kind of dragged through the mud in terms of profitability. But your derivatives account, your trading expertise, it's not expertise, it's poor, right? It's complete shit, actually. Oh, but this is the time where everything is different and the market is about to rip and we're about to go into price discovery and we're going to go parabolic and what? You've made that argument. You've used that same person's thoughts the past 4 years, and it has always led to unfavorable results or undesirable results, right? Maybe you've been neutral or break even, right? So you haven't been able to capitalize off of those opportunities. So why are we still making those same arguments today? We've learned nothing throughout past 4 years, right? But yet, everyone has an opinion. Do you understand that? 95% of traders lose, but all 100% of traders have an opinion on what the market does next and to what degree. What? How? Why? Can we humble ourselves for a minute? Let's get our feet wet. Let's learn how to throw a jab before we start attempting right hooks and combinations, right? Let's get into the stride of things. Let's learn what is the difference between a good trade and a great trade, right? What is that difference? But before we can learn that, you have to learn what is the difference between a bad trade and a good trade. 95% of people can't do that. But yet they're trying to convince you that they take great trades. They know when the market is about to rip, not just to what degree, but also exactly when and how. 95% of traders lose, but 100% of traders have some kind of, hey, I think the market does this, and then that, and maybe some of this, and then some of that, and then blah, blah, blah. And then we pull back here, and that's going to be the capitulation before we take off, right? And that'll be like a retest, but that retest is going to get front rate. 100% of traders have some kind of random fucking line drawn on their chart that says, here's what I think the market does next and exactly how it's going to do it. Right? Doesn't make any sense. So learn to throw a jab before you start attempting combinations. That's my opinion, and that has always been my opinion. And that was just simply something that I had to do in order to humble myself. I went through that same process, which is why I constantly remind you, do not let me claim superiority here. The only reason as to why I'm allowed to talk about anything is because I've experienced it firsthand, probably 1,000 times over. And I did. I went through this. And eventually I came to the conclusion that my thoughts that I thought were alpha were complete shit. And I was basically just throwing shit at a wall. But guess what? even when that shit sticks, you look at your hand and you still have shit on your hand because it's shit. Eventually you come to realize that, or you don't. Right? I don't know. I realized it. And once I realized that, good things came my way. So I would say continue with a static approach until you've built yourself a resume. Nobody in this world is going to take you seriously unless you have a resume. And people love to regurgitate, hey, past performance doesn't indicate future results. And whilst that's true, if you subscribe to that idea to 100% degree and no other thought process is willing to penetrate your bubble of past performance does not indicate future results, you contradicted everything that you do in markets, because everything that we base future analysis off of is based on past price action. Because you are a price action trader. Because you trade discretionary markets. Like, you contradict yourself if you believe in that to 100% degree. So your past performance does have a heavy impact on your future results. Good luck going to get an internship at Google, right? And you have no experience and nothing to show for it. They're going to laugh at you and crumple up your resume that doesn't exist and throw it into a hypothetical garbage bin and then light it on fire. Build a resume for yourself. And then once you've done that, things start to click. And what happens more naturally is that it starts to become a lot more organic. It starts to become, I'm not searching for this greater signal, but it fell into my lap because I've seen this 17 times, and 13 of those times it's allowed for 100% rally. The other 4 times it's been wrong. Cool. Nothing's 100%. But this is a high hit rate, high reward kind of thesis. And I know that because I've experienced it 17 times. It becomes so much easier to trade it the 18th with more confidence. If we have more confidence, what's the likelihood when we're talking about position size in our portfolio or dynamic risk amount? Are you going to trade something that you're genuinely more confident in and you've given yourself every reason to be confident in that thesis? Are you going to trade it with, I might take half an R risk? No, people would look at you and say that you're a pussy, and they would be right. Because that doesn't make any sense, right? You have this amazing hit rate, this inclination, this edge, 13 out of 17 times, and the 13 times that it's right, on average, 100% reward. You should be trading that with high confidence. How do you have that confidence if you've never experienced the 17 signals? Right? Or the 4 times where those signals didn't work, you blew up. Or the 12 times out of the 13 that it worked, you cut your position at 0.5% reward after, right before it rallies the other 99.5%. It's not possible. You can't just force confidence and conviction. It doesn't just happen out of thin air. You don't just wake up one day and decide, oh, I'm a great trader now. Oh, I know everything that there is to know about markets. Why? Well, I listened to Mercury's live stream on August 14th of 2025. That's why. What? What are you talking about? No, that doesn't happen. You traded the market for 6 months straight. You watched it go up, down, sideways. You watched it go a little bit up, a little bit down, a little bit sideways, a lot of up, a lot of down, a lot of sideways. You came out on top anyways. You built a resume for yourself. You started to get greater inclinations. You started to see patterns in the market. You started to pick up on behavior of society and how things work, and how when you're walking, because this is what happened to me, when you're walking through the halls of a hospital delivering medication and you hear one of the nurses talking about Shiba and Elon Moon coin, it's probably close to the top at that point in the market. And it was, right? I experienced that firsthand. When I see a market like that, when my high school buddies go to text me again, they're like, hey Mercury, Can you please help us? We want to learn how to trade crypto. Oh, shit. Wait a minute. Am I satisfied with the amount of profit that I've taken? Right? You start to pick up on stuff like that. But you can't do that if you don't have that experience. So learn to throw a jab before you start attempting combos. That's the TLDR. That's just my opinion, man. Again, I don't know what Static Era had to say about it, but all power to you guys. You're allowed to think whatever you want to think. My thoughts are not law, but they are my thoughts. All right, with that said, anybody else got anything for me? Surely we're not going to come in to the first stream in 2 weeks and let me get off in under an hour. Surely that's not what's going to happen here, right? Any more questions, comments, chart requests? Please feel free. No pressure, FOMO monster. We're all just waiting on you. All right, Farcoin looking kind of good for the first time in a while. Let's take a look. All right. Farcoin looking kind of good for the first time in a while. Immediately with that range draw, I can't bring myself to agree with you. I will heavily agree with you if and when we deviate back inside of this range. At that point, it would seem very likely to me that we head to the range highs. In the meantime, I'm looking at this as a bearish retest of the previous range lows. So that's just my analysis. That's the way that I see it. I imagine that maybe you're seeing strength off of maybe a lower time frame, and you're looking to scale that analysis to a greater degree. Or here's another argument. Can we not say this? What if FOMO Monster has his range drawn differently than I do? Totally different analysis, right? That's fine. You can have your draws however you see them. I want you to draw things the way that you genuinely see them, not the way that I see them. Your brain is going to repeat, right, long after I'm gone and done trading markets, or you've fucked off and said, hey, I don't care about this guy's thoughts anymore, right? Long after that, you're going to continue applying your thoughts, not mine. So you need to trade things the way that you see things. And FOMO actually said, yeah, that's actually how I have it. So kudos to you, man. If that's how you see it, then that's how you see it. That's not how I see it, so it's not the analysis I'm going to make, but all power to you, right? Eventually, one of us is going to have to bend their hand to the other. So either we're going to deviate back inside of this range, and I'll have to say, FOMO Monster had the right draw. He was on top of it. He caught the rally preemptively. I'm sitting here looking for breakouts and pullback retests. Or the market's going to continue downtrending, put in some kind of a lower low, and then I'm going to say, or FOMO Monster is going to say, well, it looks like it was a breakdown in hindsight, and maybe I should have drawn it that way, right? It's not that you should have drawn it that way. It's just that that's what ended up happening, right? So that's my thoughts. Let's actually zoom in, because oftentimes what we can end up doing is adding vindication to our thesis by zooming into lower time frames. Still high time frame, but lower than a 5-month range that is only visible on the daily or the weekly time frame, right? So let's zoom in. Let's find maybe some kind of high time frame trend. I do recall using 4-hour 200s for Farcoin on the way up. Initially, it started as 2-hour, and then we strayed away into 4 using hindsight. 4-hour 200 moving averages look like this. And you can see I have another draw there, so I'm being genuine to you. It was already drawn there, just on a lower time frame, not visible. So 4-hour 200 moving averages, right? Instinctively, I'm going to go back to what I remember using when the market was actually trending. And that's a key bit of semantics there at the end of that sentence, because people will go, why do you care about 4-hour 200s? They suck. But do you recall how after, right here is where I said this. Hey, maybe we should stop using 4-hour 200s because they're starting to suck, right? And in hindsight, kind of seems like we're just trading in a range. We were in a trend. If you made an analysis that sounded like, hey, above green and blue line on the 4 hour, be bullish. Below green and blue line on the 4 hour, be bearish. You were a fucking genius for all of these 8 months, right? The analysis was that simple, genuinely. Except for that alpha was no longer alpha because markets are dynamic. So you can't just keep operating the same way every single time, 100% of the time. It's not always going to be that way. Oh, I'm bullish again. Oh, I'm bearish again. Oh, guys, I'm bullish again. Oh, I'm bearish again. Oh, I'm bullish again. Oh, I'm bearish again. Oh, I'm bullish again. Oh, I'm bearish again. Yeah, guess what? We're going sideways. Even a 4-year-old knew that, right? So when we were actually trending, we would have been using 4-hour 200s. When we weren't trending, we would neglect that trend. We would only use it as intra-range kind of bias, but really we would care about the range, right? We would care about the range itself. But if I'm seeing this, and I'm looking at this chart, and my thoughts were already on a higher time frame outlook, hey, that looks like a bearish retest of the range lows to me. And then I look at the 4-hour 200s, which I remember using and being alpha when we were actually trending, and I see a bearish retest of those 4-hour 200s, doesn't everything start to align itself? All of a sudden, doesn't everything make sense? Right? In both directions here, by the way. Because if we are putting in a lower high, and this is genuinely a bearish retest before continuation of downtrend, and that is a downtrend, right? We had that momentum into the range, and we're still sustaining that momentum here today. We're not putting in higher highs. So if the downtrend continues downtrending, maybe in my thoughts, it is a bearish retest of that range plus 4-hour 200s trend, right? Downtrend per trail. If we're deviating, if I have to go, oh, wait a minute, guys, this is a deviation. I was wrong. Let me tell you that I was wrong with a coping purple box, right? It's a coping purple box, and in hindsight, FOMO Monster was correct. This was actually the start of a new uptrend. Then doesn't it make that much more sense for me to call it that? Because not only do I see it that way from a more vague, more broad perspective, when I'm actually looking at the daily, I go, oh, well, I don't know, we're kind of above the gray box again. Yeah, we did the same thing here. It's kind of hard to make that jump, right? I'm anticipating bottom right corner, and now when we're trading here, all of a sudden I'm anticipating top right corner. It's kind of hard to make that analysis, isn't it? It doesn't really stem with a lot of confidence because I'm looking at this price action. We did the exact same shit. The difference is this time, I don't have to just make that argument from that perspective. When I zoom in, it makes that much more sense. The stars have aligned, right? Not only are we deviating back inside of this 5-month range, we're also reclaiming those 4-hour 200s. So in hindsight, that's a deviation. FOMO Monster was correct. We probably go to range highs. That's my analysis, and that's how I would look to trade Farcoin. I urge you, don't just throw your thoughts into the garbage bin because of something that I said. You are only ever going to be able to trade markets based off of how you see markets, and that is largely discretionary and subjective. So really the true test here is if you are wrong, FOMO Monster, how can you adapt? If I end up being right this time and you end up being wrong, how can you adapt? If you can make it out of that scenario regardless, there is no fear of, oh my god, what if Mercury's correct? What if Dip Wheeler really is cringe and he just continues to bull post Fartcoin every day? Well, he is, right? That doesn't change whether Fartcoin is $2 or 2 cents, right? He's cringe. I love him, but he's cringe. He's hilarious. Still cringe, though, right? Yeah, it goes out the window. We sustain that confidence within ourselves. So that's how I see the market. That's not a hedge, but all power to you, right? You're going to have, even if my thoughts are correct and your thoughts are incorrect, you are going to have a substantially harder time trying to trade my thoughts. Which is why I say that Friday altcoin watch list, as much as, trades win and trades lose, but mostly trades win, it's not really all that valuable to you other than, oh wow, Mercury really has been able to practice what he's preached to us in these streams. I've seen it in real time, and this has been the results in hindsight. wow, these things really do win. Okay, that shit really works. Maybe I can do it myself. That's the only way that it's going to be valuable to you. I don't believe in copy and do as I do, even though I'm sending you setups, right? It's not the reason why I send them to you. It's not valuable. So, always trade your own thoughts. Don't try to trade mine. Sorry, I need more water. All right, Yaga's in here. What's up, Yaga? Yaga says, we've had very strong coins running, pretty overextended for some time now. Hype is one example, and we're seeing some laggards at inflection points trying to reclaim key levels, Doge, INJ, Say, etc. All that with BTC struggling at 6-hour 200s. I know you treat each chart separately, but I also know that BTC uptrending is better for alts. What's your thought process on the current market conditions, risk and exposure, and on asset selection? Would you rather bid a low time frame trend retest on strong assets, hype, ENA, pump, or high time frame reclaim on laggards? I know this is a long and weird question to ask, but I feel like the time is right for that. I hope you had a good time in France. Yaga, I had an amazing time in France. Your country is beautiful, man. It really is. It was just awesome. Just talking about in the beginning of the stream how amazing that trip was. It was really a dream vacation, I have to say. So, now, for your question, the answer is hedged, and I'm sorry that it's a bullshit hedgy answer, but it is, right? And it's my genuine answer. Would I rather bid the low time frame trends on a strong outperformer like Hype? Shout out to Hype, man. I actually am in this trade, so it's actually running. Thank God. My portfolio has just been stagnant the past month, but whatever, right? Hype is ripping, dragging my portfolio higher. Shout out to Hype. Would I rather bid local trend trades on Hype, or would I rather start to buy, high time frame trend reclaims, laggards, hey, this might play out a month from now, 2 months from now kind of setups. I like to distribute my exposure. I love what you said because the question is framed in such a way to the point where you're kind of answering your own question. Not really, but you're allowing me to very tangibly present to you the answer because you've already dissected it and created these groupings for me. You're talking about outperformers. Really, you're talking about good trade setups. A good trade is a good trade. Whether it's a laggard play, then it was previously weak and now it's reversing, or it was previously in a range. Pump. It was previously in a massive range and now it's breaking out, right? Or if it's hey, this thing's in literal all-time highs. And if it pulls back, that just means that, it's pulling back into a local trend before maybe the next new all-time high, right? The same way that SPY has done the past 5 months, right? That's a good trade. Those are both good trades. They're framed different ways, but they're both good trades in the sense that if you take positions like that long term, you are going to do well. Period. It's not that if you buy the breakout of this range on pump, you 100% guarantee are going to make money on pump. No. That's not what I said. But it is if you do that over the course of 100 samples, whether it's pump, INJ, Doge, Bitcoin, Ethereum, SPY, it doesn't matter. You're going to be profitable. You're gonna do well. The times where you're right, this happens. The times where you're wrong, you lose 1 R. Who fucking cares? Who fucking cares that you lose 1 R? A good trade is a good trade. So here's how I break it down, Yaga. I don't want to be in 5 different coins on the 15-minute time frame because they're all outperformers and they're all ripping into price discovery. Because even though that's the case, even though all 5 of those are good trade setups on their own right, I know damn well that if Hype breaks down from its all-time high local trend per trail, the other coin that's also in all-time highs, even though they have nothing to do with each other, they're not basketed, they're not AI, they're not both meme coins, they're not both, right, layer ones, they have nothing to fucking do with each other. They couldn't be more opposite, but they're moving at the exact same pace. They're doing the exact same thing. The charts look uncannily similar. Chances are when hype breaks down below its 15-minute 200s, it's because that other coin that's also in new all-time highs is breaking down below its 15-minute 200s as well. If I'm taking the same bet 5 times over, not only am I betting that that's a good trade, but I'm betting 5 times that that's a good trade right here, right now. If I'm wrong once, I take 5 losses. Now I'm heavily relying on variance, right? But if I distribute that exposure, if I have some hype exposure because it threatens price discovery, but I have some BNB exposure because it also threatens price discovery, it's just taking its sweet fucking time to actually move, right? It's breaking out of a 1.5 year long range. It threatens, price discovery the same way that hype does. It's just doing it a lot slower. Oh, and I bought the breakout on pump because for the first time since its existence, it's actually putting in higher highs and higher lows on a high time frame kind of outlook. I have 3 different kinds of trades. What happens on hype is highly unlikely to have anything to fucking do with what happens on BNB, and it didn't. You saw that breakdown on hype. You saw the weird choppiness before it rallied, just recently. BNB has just been holding an uptrend the whole time. And it has nothing to do, whatever BNB does has nothing to do with what pump is going to do. And it didn't. BNB is still stagnating. Sure, it made a new all-time high yet again today, but it's still pretty stagnant. It's really just kind of refusing to show a lot of momentum. But here's pump, it's up 70% in the past 2 weeks. Those 2 things have had nothing to do with each other. But all 3 of them are good trades. I like to distribute that exposure. I like to be very mindful, very cognizant of not just what trade am I putting on, but what kind of trade am I putting on. I don't want to be exposed to 17 laggard plays, right? And then I convince myself, oh, I'm not a degenerate. I'm, still within my risk management in terms of like an overall cap for my entire portfolio at any one period of time. But really what I'm doing is I've taken 17 trades. I'm essentially taking one trade on a 17 times leveraged bet on the same outcome. That's what I've done. So I try to avoid that as much as possible. I allow for crossover, right? I am in Doge and INJ. I'm in both. I'm okay with being in both. I allow for that crossover, right? With whatever I'm comfortable with, but I'm very, very mindful of what I'm doing. So you will not find me exposed to 5 laggard plays any more than you will find me exposed to 5 15-minute 200 amaze trades on coins that are ripping into price discovery. And then you go, but Mercury, you tell us to trade the outperformers. And it's like, well, yeah, but don't take everything I say literally. You don't need to force positions on the coins that are ripping into price discovery 17 times just because all of them are in price discovery and above 15-minute 200 moving averages. That's ridiculous, right? So hopefully that answers your question, Yaga. Matthias says, I would like to add to Yaga's question. What is your experience concerning low time frame and high time frame setups? Is one more probable in general or in some special market conditions? First part of the question is more of a statistical question, or does it come down to personal preferences? One feels more comfortable in 5-minute time frames, the other one in 12-hour or daily charts. I can't honestly tell you what's more probable. So, like, you can make an argument. What is a massive reversal play that we caught? So, like, this breakout on Ethereum, right? It was a reclaim of this range or re-entry, so deviation. It was also a breakout of 200 dailies, right? That's a high time frame setup. Granted, it didn't really take that long to play out, but it's still a very high time frame setup. that's a good setup. That's a good trade, regardless. No matter what happens next, even if we overthrow and then break back down, I'm still going to die on that hill. That's a good trade. Those are high hit rate for me. I don't see anything wrong with taking those kinds of positions. At the same time, you can make that argument. We go to hype. We go to a 5-minute time frame because it's parabolic right now. Right? Or maybe even something more obscure, like a weird 10-minute time frame, right? Well, yeah, we're breaking up 10-minute 200s, 10-minute 200s. Those are good trades. I don't know what to tell you. Like, that's a good trade. It's not that one is more probable. It's not that one is more rewarding necessarily. It's just the probabilities and risk reward that gets attributed to that specific trade makes it a good trade. This is highly probable, but it's not all that rewarding. You're trading a 10-minute time frame, right? So you're anticipating like maybe another 5% bounce from that region. Cool. You know, when you scale that to the 10-minute, maybe that's a 3-4R trade, whatever. But you're probably, I cannot imagine that you're trading high conviction, right? Crazy risk management amount, dynamic position size setups on 10-minute 200 moving averages. I just don't see that being realistic, if I'm being honest with you. And I just personally am not able to do that, so maybe I'm projecting, right? But I just don't see that the case. So even if it's 3R, it's not 3R the same way that I'm getting 3R on that Ethereum breakout trade, is it? Right? So just kind of think about it that way, I guess. Hopefully that makes sense. But really, it's not like, oh, this is more probable and this is less probable, or this is more rewarding or this is less rewarding. It's the culmination of both. They're both good trades. You want to take both of these kinds of positions, especially if you're someone like Brando who thrives off of these lower time frames. Brando, if you're not trading something like hype, right? When you do your scan of the day, you're like, I need a volatile altcoin to trend trade today. If you're not trading a coin like hype, slap yourself. Not actually. Don't let me put you down like that. It's just a joke. But, right, these are these kinds of coins. You want to be taking those kinds of trades. That's your system. That's what you thrive off of. Someone like me, I love the breakout trades on Ethereum. Breaking out of a multi-month range, right? Expanding away from a year-long range. Reclaiming a 4-month downtrend. I love those kinds of plays. It's not necessarily one is better than the other. It is, which you alluded to, what are you comfortable with? Someone like Brando is probably not going to take that Ethereum position after a 4-month range breakout with the same degree of conviction that I do, because they thrive off of 5-minute time frames and catching very quick, very sharp kind of rallies. That's where they feel that their edge is expressed best. And that's where they feel most comfortable. That's probably going to be what brings them the most amount of reward as well. I am not going to be able to come in. It's the same stupid 5-minute, it's the same stupid green and blue lines, but just on the 5-minute time frame instead of the daily or the 4-hour. I'm not going to be able to come in and extrapolate the utmost reward from that position either. I am going to do my best to catch some kind of culmination of both. And mind you, those are both sides of the extremes. I gave you a 4-month range breakout and daily 200 MAs reclaim. That's one side of the extreme. I gave you a rip into price discovery parabolic 5-minute 200 MAs trend. That's the other side of the extreme. I'm going to play both sides of the extremes and everything in between. I'm going to be mindful of it. But, yeah. I kind of answered your question, I hope, but we'll see. If you want to elaborate, please feel free. Yaga says that sure does make sense. Ray Dalio usually says that the hardest part of investing is finding good uncorrelated assets. And I think this is kind of what you say, being mindful of overall correlation between low time frame setups to not imply too much risk on similar trades. Yeah. Something I've been trying to implement more as well, not only on different assets, but on time. Not opening all my high time frame longs on one pivot point on one day and diversifying across times and days as well. Well, that's a good thought. That's a good thought. So to that, I can kind of contradict you, because if you're not taking good setups, I'm sorry, if you're not taking setups when setups come to fruition for you, what are you doing, right? But at the same time, what you said makes a lot of sense. Do not think that these are mutually exclusive. What you said makes a lot of sense. Why are you opening 7 brand new? Oh, we just broke out of 200 daily MAs on this coin, this coin, this coin, this coin, this coin, this coin. I just now, here today, all within 5 minutes, my portfolio was 100% stables. Now it's 80% exposed. 5 minutes have gone by. Whoa, whoa, whoa. 1 hourly candlestick, and that has dictated how you see the market for the next 6 months. 80% of your portfolio's exposure. What? That's a big leap, right? So again, that goes back into be very mindful of your overall exposure. Maybe you want, on that day, you want to take 2 breakout trades above 200 dailies, and the next day you see a low time frame trend get retested and you take a position there. And then the day after that, you see a coin break out of range and you take a breakout trade there. And then all of a sudden, you have 80% exposure off of 7 different trades in 7 different time periods. But the difference there, Pancake, is what we're focused on that leads to the same result anyways. I'm focused on the kind of trade. You're focused on the time aspect of it. It's probably going to lead to the same result anyways, but I find it easier to focus on the kind of trade. I'm not going to open 7 new reclaim 200 daily breakout of a range trades, right? All on the same day, in the same hour time span. I'm just not going to do that for my reasoning. You're not going to do that for the time variable, right? I'm not going to do it because it's the same trade 7 times over. You're not going to do it because it's the same trade 7 times over in the same hour. In the same hour, sorry. You just said, yeah, I would want to get your thoughts on this as well. Did I just answer that? I think I just answered that in that little bit of spiel there. Of course. I'm glad it made sense. All right. Anybody else got anything for me? We're about an hour and a half in. Questions, comments, chart requests, please feel free. Brando, I love using you for example. I hope you don't take any offense to it. It's just everyone's familiar. Everyone knows what kind of coins Brando likes to trade, right? It's not a secret. It's not bad either. It's not. Let's get this straight. It's just not a secret. So good to have you back. It's good to be back, guys. I appreciate that. Stopped on hype but caught pump. Very nice. Can we take a look at Link? Absolutely. All right, so Link is still holding high time frame structure and breaking out of a pretty key range, right? So I'm looking at this as a range overall, and this would be a deviation to this range. So the argument is, oh, well, we deviated last time, but my argument is I would have called for the breakout this time, and we would have been wrong. That's fine, but that's also because I would have called for the breakout here, and we would have been right, and that's what leads to that. So yeah, I'm still going to make the same argument. As long as Link holds above that range on a very high time frame basis, we're still fine. There's really not too much of an issue here. I'm not seeing the bearishness in the market. You know, hey, we're breaking out of a massive range that we've been trading in for the majority of the past year and a half. Okay, and what is the doomer kind of, mindset here exactly? So I would have told you the same thing here. -1R, we're wrong, we look like idiots, we're bullish at the top. Cool. none of that matters because we're too focused on all the money we made from this time where we made the same argument and it was right. And we caught a 150% rally as a result. So it's still the same argument today. I'm still going to die on that hill for better or for worse. And that's just a very high time frame kind of outlook. So now we can kind of hopefully try to whittle this down to a more actionable degree. So we're not just, lost and babbling idiots making the same argument all the way through just to potentially be wrong, right? So we can whittle it down and look for the context of that market. And the context, I'm going to say, are these 4-hour 200s. So this is just a very simple high time frame swing trade setup. And what I mean by that is we're just looking for continuation. This is, in essence, it feels the same as the green and blue line go burr, right? It feels like that. It's not that, but it sure feels like it because it's the same trend that we've been respecting for the majority of the past, so far this year, I guess we could say. So 9 months. And it just works beautifully. It just has an uncanny kind of respect attached to it in terms of how well price action is able to react off of these regions in both directions. And it's done that most recently as well. So it would have been the foundation to our arguments. Hey, Link is breaking out of 4-hour 200s in addition to breaking out of this range as well. We're still above that range, right? And in fact, we're above an even greater range this time, not just this, mid-range to range lows kind of period. So it's the same argument and it's the same trend. It's the same 4-hour 200s. Is it okay to anticipate immediate trend continuation? That question is going to be answered based off of more context. We need more detail, we need more depth, right? To be able to actually make that argument and feel confident in it. So we zoom in. We look for a local trend per trail, and that's going to be what helps us understand, is the pullback, has that been navigated already? Is that behind us? The worst is behind us. We can look for trend continuation. There's not really anything to stop us from seeing higher highs and what we're anticipating to be, higher lows and what we're anticipating to be higher highs across all time frames, right? Breaking out of a 1.5-year range above 200 dailies, whatever trend we want to use for that time frame scale, respecting 4-hour 200s as a higher low in terms of structure, right? Are we going to see that now? So the 4-hour 200s analysis is, as long as we're above this, we'll see that eventually. But can we look for it today? Can we look for it next week or this week or, whatever, right? And I would say we can, because hourly 200s are the same bearish indication, snowball of weakness, right? That creeps into the market that says, hey, if you haven't taken enough profit at this resistance level, because it is resistance, maybe do so now, because we're threatening a deeper pullback than anything we've seen before throughout this rally and this trend, right? We could have made the same argument here. We would have said plan A part 2. We would have been wrong, and then we would have readapted, right? Oh shit, we're breaking back down again, and then, right, we continue lower. We test 4-hour 200s. When we break out, we would say, in hindsight, our inflection point held successfully, higher low on the daily, breaking out above a massive range, above 4-hour 200s is trend support, probably going to rip higher, at least into this range high, maybe even to the next resistance level too. And then we do. So we're going to navigate this market the same way we would have navigated last time, and it would have worked, right? Even though it wouldn't have here, because we would have gotten chopped up, right? And it ends up being fine anyways. Same shit. So you could even make that argument here too. Maybe you get chopped up. Maybe that looks like plan A part 2 to you. That's fine. It breaks right back down. You cut that position. We break down. We test our 4-hour 200s. Off of that test, we're not just relief bouncing. This is the difference, right? I know it's semantics, but these are mental heuristics that are going to help you out in terms of what is the difference between these things. When is it go time and when is it still, I could leave room for caution, right? This is a relief bounce. This is a reclaim, but it's the same price action at the same price. It's different though. It's not the same price action. That is a relief bounce. This is a reclaim. Those two things are not built equally. One is a signal, right? One is a continuation signal. The other is, yeah, we're still showing the same bearish argument that got us here in the first place. How are you going to tell me all systems are go? Right? We just made the same argument on Bitcoin here today. It's bearish retesting 6 hour 200s. When it reclaims it, it's continuation all of a sudden, right? So it's the same thing here. We're reclaiming our local trend on Link, which makes me think 4 hour 200s have been successful the same way they were last time. That would have been our foundation to the argument. Now here's how we branch off of it in an even more actionable degree. As long as we're maintaining hourly 200s, I can anticipate immediate trend continuation sooner rather than later. So all things considered, Link looks good. The little bit of nuance here, and just kind of like, let me plant this seed just in case it needs to be watered later. If hourly 200s break back down, it doesn't mean, oh, just throw it into the garbage bin. 4 hour 200s are clearly going to break down too. No. That's not how that works. It would be now the hourly, that time frame is in a range, right? And the high time frame is still an uptrend the same way it has been. And then from there, if we break down below the range, then we're breaking down below that uptrend as well. If we break up and out, we're continuing the uptrend. So that's how that would develop in the event that that's what happens. But again, that's not our anticipated outcome here today. That is a seed, and that's how we'll adapt just in case that seed needs to be watered later on. Would you give me your opinion on a stock? Ticker is ALCPB. Yeah. ALCPB. Just broke out of 30-minute 200s. Before we look at 30-minute, I want to see what does the high time frame look like. So very weird stock. Immediately, Yaga, I have to let you know that you got to take my analysis with a grain of salt because this is just so odd to me. This movement is impulsive in its nature, and because of that, it makes it disappealing or unappealing or disincentivizing for me to actually go and trade my analysis that I'm about to give you. So it's kind of hard to respect somebody's analysis when they wouldn't even trade the analysis they're making. I need you to, hear me out on that. So it's impulsive. It's weird to me. Immediately, if I'm looking at this in terms of like assets that I want to trade, I skip. I go to the next chart. I don't care what level we're testing, trend we're testing. I don't care. I'm out. I'm going to go trade something else. So with that said, are we testing key levels? Are we testing key trends? I would say 200 dailies are a key trend. I do think that that's a fair argument. So that is a very key trend, and we're retesting it as support here today. How much can I respect that? I don't know, because that's an impulsive movement. Again, kind of just throws me off. Makes me feel like we're more susceptible to actually see some kind of fluke or breakdown or whatever, right? Or chop even if we are going to see a reaction, right? I just feel that way. So doesn't necessarily mean that I'm right. It's just my thoughts, right? So that, and then we can contextualize it. Obviously, that's a downtrend. So is 4 hour the best way to portray that? It might actually be the best way. Actually, I think it is. I think it is the best way. I don't think we're going to get anything better. So 4 hour 200s, high time frame downtrend portrayal. Really, the fun starts when we're able to reclaim this trend. And that's where I can target price discovery. But until that happens, I'm going to frame this in the sense of, sure, we're getting nice relief bounces, and there might be good kind of room for white space in terms of I'm calling it a relief bounce, but that's a 60% movement from inflection point to inflection point. There's a lot of money to be made in that 60%. That's not something to scoff at, right? But when I talk about it, I'm still going to call it a relief bounce. It's still a bearish retest. of the high time frame downtrend that allowed us to retest our very high time frame uptrend, those 200 dailies, in the first place. I can't just neglect that. And then you said maybe a low time frame trend portrayal is 30-minute 200s. We're starting to break out. I actually agree. I would even maybe say 15-minute 200s are a better trend portrayal in my humble opinion. And that's just my perspective. These are not like enough to really convince me that that's a breakout or a reclaim of this trend. Kind of just looks like a bearish retest the same way that this does, even though this is very clean and pinpoint precise and this is a little bit of overthrow. Discretionarily, I still see it the same way. So I wouldn't be calling that a breakout. I do call this a breakout. And then I'm wrong, right? It breaks out just to break right back down and I go, oh, I guess I'm wrong. That's a fluke, bull trap, bullshit, sweep of the highs, deviation, whatever. It doesn't matter what I call it. It is, I thought we would go up, but it looks like we're going to go down anyways. And then we went down. This looks like a breakout to me, though. So now I can start making that analysis. This looks like a breakout. Maybe we are going to see that relief bounce from 200 dailies to 4-hour 200s. And even though that is going to be a bearish retest of that trend, I am prioritizing 200 dailies, and I've found a more actionable way to go and represent the idea that we are more likely to see a reaction sooner rather than later, especially compared to any of this price action or any of that price action. Granted, I would have told you the same thing here. I would have been wrong. Still, I think that's a pretty good bounce. It's a 20% bounce. It's not bad. So I would have been wrong still, even though it's a 20% bounce, and we would have figured it out anyways. So same thing here, right? This is why I love this trend. So take it, that same exact analysis, flip it on its head. Hey, we're just going up. The analysis is basically, as long as we're above stupid green and blue line on 15-minute time frame, stop making bearish arguments. You're an idiot. Right? That's what it sounds like. Oh, never mind. Just kidding. We're actually breaking down. It looks like we might see deeper pullbacks. And oh, never mind. We don't care. We're going to break out, and then we see continuation. And then I make the same argument here. Oh, just kidding. Never mind. I guess your bearish arguments are right in hindsight. But Mercury, didn't you say this time? And you were wrong? Yeah, but it's still winning philosophy, though. What if this time I'm not wrong? And then that time I'm not wrong. So, same exact thing, right? I was wrong here. Maybe we're right this time. I was wrong here. Maybe we were right this time. Same style, right? So, we found low time frame, high time frame, and very high time frame trend. I feel good about that analysis from that perspective overall. As far as just outright bidding 200 dailies and hoping and praying that they reverse, I wouldn't feel all that confident in that because that's what I'm trading. And that's just me. That doesn't need to be everybody, but that's just me. When we add that depth, add that context, it adds more detail. It becomes a lot easier to see the arguments we're making and why we're making them, right? And that adds conviction, that adds confidence. Oh, yeah, wait. So is this literally, you drew the same setup? You came to the same conclusion as me, Yaga? Let's see. You have 460. Oh, okay. So your target's a little bit higher than mine would be, but same idea, right? Real fun starts when those 4-hour 200s are reclaimed. And we see continuation. All right. Anything else that you guys have for me? I don't see anybody typing, so I guess we're just going to go ahead and end the stream here. Thank you guys so much for tuning in. It feels great to be back. We are back in stride. Listen, my next major vacation is not until the end of this year. So holiday season, Christmas time, New Year, all that kind of stuff. So we're locked in, man. We're here for better, for worse. Chop, bullshit, bear market, bull market. We're locked in. So we're back in stride. 3 live streams a week, consistent altcoin watch lists. Yeah, let's get it, right? So I feel good that we're back. I hope that you feel good too. Thank you so much for tuning into the stream. I hope you're getting value. I hope you've done well. I hope you have stayed sane in my time away. Notice that I didn't really give a lot of daily market updates because the market didn't really do much. And yeah, much love. Take it easy. I will talk to you again on Friday. Peace.